Thank you for joining this episode of Real Talk, Real Trust. I'm your host, Ryan Picchini. I'm thrilled to be with you today. The topic of our session today is winning mindshare and market share through digital content. We're going to focus specifically on financial services. The promise of this webinar series is helping digital leaders find ways to build trust with their customers and their prospective customers and cut through the clutter. There's so many things that we can do as digital marketers and IT leaders to fill our day. But at the end of the day, we believe that trust is the currency that's going to help drive growth. I'm thrilled to be joined by my good friend and former colleague, James White, as well as our CEO, who is a staple on the show, Zain Isaac. So thanks, guys, for joining us today. Why don't we start with a quick round of introductions? And James, how about 60 to 90 seconds about you and anything you want to share with our listeners?
Absolutely. Thanks, Ryan. It's great to be here. So I've spent the past couple of decades helping financial institutions grow, strengthen customer and member relationships, and modernize engagement. So my background is both in banking and fintech strategy, and my work life lives where data, trust, and human interactions intersect. So that's really the space where an institution is going to grow or not.
Great. James, thanks for being with us. Great to see you. Zain, over to you. A quick intro as well, please.
Yeah, hi, Zain Isaac. I am currently the CEO of dotCMS. Spent 10 years before this doing investment banking, different parts of the world, South Asia, Middle East, Europe, and then ended up launching a fund out of North America, which acquired dotCMS 4 years ago and have been operating. So interesting, obviously, intersection between finance and technology. Which is I've probably spent most of my career. So excited about this discussion, Ryan.
Two epic guests on the show today, and we're excited to hear your perspectives. But with every episode of Real Talk, Real Trust, we start with a little rapid fire, primarily to watch you squirm a little bit, but to have a little fun and give some insight, just as to how you think on a variety of topics. So we're going to primarily hone in on financial services, but maybe one or two curveballs as well. James, we'll start with you. James, what is one use case, because we are talking about financial services, what is one use case where AI is impacting EBITDA?
Well, that's a great question because there's a lot of research out there that talks about how it actually is not impacting EBITDA. And I would argue that is because the institutions aren't implementing it in the right way with the right focus. So AI is giving back the financial institution its most important resource, which is time. So
Mm.
automating personalization, compliance check, content tagging, all of that is really shrinking the amount of effort it takes between insight and action. Because AI doesn't replace people. What it does is replace human inefficiency.
Wow, James, start us on the right path and a powerful answer there. We're going to unpack some of that. Let's change gears a little bit with rapid fire, and I'm going to ask you to try to keep this to a sentence or two because this is a loaded one. What is the best advice you have for dads with high school or early college age daughters?
So first off, patience. I call them EGR, extra grace required. So
Love it.
you want to listen more than you lecture. Basically, you want to be able to establish trust because the questions get harder and harder, and you want them to be able to feel comfortable talking to you. But girls are mean.
James, we as Zane and I both have daughters who are younger than yours, so we're gonna try to capture some of that feedback and implement it in our personal lives. One last rapid fire question for you before we get into sort of the meat of the discussion today. Who's one FI or institution bank that you think is doing a great job of building trust in today's landscape?
Yeah, so First Tech Federal Credit Union is one that I would keep my eye on. One, they've just merged or announced a merger with Digital Credit Union, which is a massive merger. It's one of the largest mergers of two equals, and they do a great job of leveraging technology to pair empathy at scale.
Hmm. That's empathy is an important word. Usually, you hear the word service, so it's interesting you took that route. Well, thanks for bearing with us on the rapid fire. I'm particularly excited about our topic for today because at dotCMS we work with a variety of customers, but financial services, for lack of a better term, is the OG. From day one, financial services has understood that trust is so important. It's the currency that they use that essentially to build their house on, to build an organization and long-term customer relationships. So, I guess one of the questions I had for you who spent your career within financial services, how do you define trust?
Yeah, so I define trust in multiple layers. So first, there's financial trust. My money's safe. There's emotional trust. The institution understands me or desires to understand me. And then there's digital trust, which is my
Mm.
data is secure and the experience works. So if you lose any of those, the whole relationship starts to wobble.
The last one's particularly interesting that you separated that out because I'd imagine for different segments of customers that there's more inherent trust with digital and others who aren't. So let's unpack that a little bit further. I guess one other question around trust before we get into some of the consumer trends and how they can leverage digital content is, what are the nuances of the word trust that exist within financial services that might not necessarily exist within other industries?
Yeah, so trust is really it's a very interesting thing, and it can be used as a buzzword, but it is so important because the nuances are for the older demographics, the boomers. It's the safety and soundness of the institution. That's what they believe is trust. But now with the younger demographics, it's more about those small moments in between transactions. It's
Oh.
about knowing the question before they ask, or the notification that feels like it's written just for them. So it's really interesting because trust is universal. We all need it, it's in all of our relationships. But with financial services, it really carries extra weight because people aren't just trusting us with their data, they're trusting us with their dreams, their homes, their retirement, their kids' education. That's a ton of emotional equity and not just financial equity. So trust is really compounding when you think about it in financial services.
I love how you broke that down, James, because and at first glance it's, hey, is my money safe and can I put my money with you? Are you going to do what you said? But really what's under that is emotions. It's
Mhm.
emotions and dreams and things that are driving happiness in someone's life. And so there's multiple layers there. So that's great. Um, as you think about engaging both boomers or the next generation, can you talk about some of the biggest trends that are impacting? Let's focus on banks and credit unions for sake of narrowing the conversation a bit. What are some of the things that they're working through that in terms of changes in consumer behavior and how they build trust?
Yeah, so it's really a death by a thousand cuts for a bank or a credit union. There's so much pressure to engage with the consumers, whether it be customers or members, in the right way. And uh, you still can't forget about the older demographic. They're the ones who still fund your financial institution. So you can't forget about the boomers, but you have to be able to engage with the millennials and the Gen Z. And it's all different. They all have different consumer expectations. And so the big pressure is how do I give a personalized communication with regards to each demographic? And how do I change and evolve as an organization? Because I would argue that culture is their biggest obstacle to overcome. So
Mm.
being able to have the human and the tech evolve and be able to pivot according to each of the different demographics, and the cultures aren't just they're not used to change.
Okay, so that struggle of what you kind of highlighted two big things you're dealing with. One, you have different segments within a bank. One that you need to continue to make sure that they're happy because they're the foundation, and then the emerging segments that are going to fund the bank in the future, and this coming together of a new culture, right? So, what are the things that are within that culture that are preventing most banks and credit unions from taking the steps forward they need to evolve their culture?
Yeah. So if you really think about, a lot of individuals don't grow up thinking that they want to be a banker when they grow up. That was something back in the 50s. But these days, you don't hear in job fairs or at elementary schools about, I want to be a banker when I grow up. So most of the employees at the financial institution started out as a teller, as an example, in high school or college, and they liked working there and they have evolved. So a lot of those employees have been at the institution for 20, 30, 40. I even heard one this week in my travels, 50 years. So they're just not used to a tremendous amount of change. They've always done things a certain way. And they also oftentimes don't have a lot of experience outside of their individual financial institution. And so the problem with culture is a couple things. One, they need to be prepared as these individuals retire, because they are coming up to retire, and as they bring on the new employees, what kind of culture are they going to bring with them, and making sure that you're establishing that. But, also, at least I don't know about you, but I don't love change, and I'm not just, chomping at the bit to be Southern, to change, and so, that's pretty common, and so being able to evolve these organizations and change to be able to compete with these fintechs, these B2C fintechs, has been very, very difficult for a lot of organizations, and sometimes, you see that in mergers and acquisitions. A lot of organizations who can't change or can't evolve are being acquired or merged into other organizations.
Yeah. And that a big part of that is their client base, right? And that there's value in that additional client base. And so even as those mergers take place, there's going to be foundational concepts around building trust within financial services that hold. And maybe I'm going to pass it to you, Zane, to kick us off with an answer for this one. What are the things that are tried and true within financial services to building trust, regardless of sort of how tech evolves, um, that that banks and credit unions need to hold to?
Yeah, I guess obviously trust remains foundational. I think there's no arguments there. Everybody on this call is saying that, but I think how you drive that trust is the question. I would say security, clarity, and reliability
Mhm.
are I guess the foundational blocks. And then I guess as far as um, engagement of content goes, I would say relevance and timeliness, and that goes back into some of the personalized experiences that we alluded to earlier. Um, and yeah, I think the best financial institutions they try to educate and not
Mm.
sell. And then these experiences uh, are kind of continuous in different channels, right? Whether that's mobile or when you're walking into a branch or whatnot. So you have to have some kind of um, continuous experience versus I guess siloed experiences that you're used to historically.
Yeah, Zane, a few really critical points that, the reliability piece and then the continuous experience, how you evolve that experience are things that really hit with me. And obviously security as the foundation of that. James, anything you want to add or build on what Zane shared?
Yeah, no, what he said was perfect. The other thing I would say is just consistency. So making sure that you're delivering the same message in a consistent way in an omni-channel experience. So no matter where that consumer engages with the institution, they're getting that same message that is timely and relevant, and all those things.
Yeah. One of the things we talk about at dotCMS, I'm taking the liberty to share my thoughts here as the host, is velocity, right? And the importance, consistency has to be matched with velocity. If you can't get the right experience out to a customer, especially in the world of retail, traditional retail banks and credit unions, a digital native is going to get to them before you do. So if the educational content, the product related content, if that is not out quickly, that you are at risk of that customer putting a product in another financial institution. So that's probably a self-serving segue. So go ahead, Zane, please.
No, I just wanted to maybe caveat what you just said. Yes, time to market is absolutely essential, whatever content we speak of. But in the financial services context, we are talking about very compliance-heavy workflows, number one. Number two, I would argue that financial institutions are more siloed than any other industry. So you have compliance sitting somewhere else, IT sitting somewhere else, marketing sitting somewhere else, and product sitting somewhere else, and they're kind of doing their own thing. While what you talked about, going to market with a piece of content, requires all of these teams to kind of work together, which is obviously very challenging in this context. And then last thing I would say is, authenticity. You have to balance speed with also making sure that you don't sound like a chatbot. So some of the themes I think we should, keep in mind as we talked about speed to market.
I think it's a great point, Zane. It is, maybe we call it a measured approach to content velocity, where you have the right governance, you have the right workflows, you have the right team members contributing, but all in the context of knowing that there are many things that need to go into that process to make sure that it's driving trust and it's following the needs of a financial institution. So, but those are great points. Maybe let's talk conceptually about why nailing digital content is so important. I think we've alluded to it around concepts like evolving the experience as well as having the right governance. But James, maybe you can just say a few words on why digital content is going to be so important for banks and credit unions.
Yeah, absolutely. Well, it's because the branch has moved to the browser. That's where the relationship begins. Education is the new advertising. So, consumers start their journey for guidance, not products. If your content doesn't teach them before it sells, you've already lost them. So, banks are used to rely on that handshake for trust. Now it's a headline, now it's a short video, it's an article that delivers clarity and empathy, just as you mentioned. So, the digital content is crucial. It's been this industry has been just really focused on print mail for so long, and so that really began to evolve to digital. I'd say 5 or 10 years ago, but now it's even more dramatic than ever. That digital has to be the starting point.
Yep. The Zane, looks like you may have a comment.
Yeah, no, I was, it just came to me as you were saying. I think banking has always been about relationships. There's no questioning that, right? You go to the branch, you meet with your manager day in and day out, and over time, obviously, you build a very deep relationship. And now relationships have just all moved online, right? From dating to recruiting to anything else that you can talk about. Even, we're doing this over the internet. So, it's just moved digitally. And, if you have to build that same trust as somebody walking into your branch every day, but they are going to be obviously consuming your content, online, it's a completely different game. And I would argue that content is no longer marketing. This is your entire operations model. And the better you do it, is more differentiated you would be. So you asked, why is it so important? I would say it's literally, the new way banking is done. And secondly, because nobody's doing it, because it's just so hard, to have that unified content strategy to make sure that you're kind of touching on all touch points with its authentic, um, consistent message and educating customers rather than selling to them.
Oh,
Well, and Zane, just to add on to that, one of the big reasons for that is just what you mentioned before, silos. So oftentimes the organization, bank or credit union, doesn't have a method of unified communication to that customer or member. Mortgage department's gonna be reaching out and speaking in one way, the retail side of the bank or credit union the other, insurance, wealth, commercial, and so having a unified message, a on-brand message, and content that is communicating with all customers, no matter what vertical that they're in or business line that they're in, is crucial.
yeah. And so it's the branch to the browser, the amount of a unified voice from a bank or credit union. These are things that are kind of well known, right? And that's the overarching challenge that a CEO of a bank could see. I'm curious what you see on a day-to-day basis, James, when it comes to a bank or credit union's content. What is sort of the default, what they have, what are they working towards, and what is missing?
Yeah, so what they often focus on is just overall high level brand message. And when it comes down to the very specific content, that very business line specific is often, missing the mark. So I have seen a big transition over the years, like we talked about a moment ago with print mail. It started going away and dropping dramatically, and then it started picking back up again. But a lot of financial institutions are still using print mail as an example, whereas they should be more focused on the digital content, open internet, marketing sequences as well, online and mobile banking. All of those content pieces need to work harmoniously together.
Yeah. What about James, what about the categories of content? Product specific content, educational content, expertise on concepts like that. You talked about the first interactions you have with a bank. It's not for a product. It's to learn. It's to be educated. It's to find a solution. Where do you think most banks fall on the spectrum between product, educational, thought leadership, content? What's missing and where do they need to go?
Yeah, well, from a financial education, I'll start there. Most of them have a blog that is out there. There are also some third-party tools that they can purchase that you can access from their web, but they aren't doing a lot of marketing content around uh, a a very specific message. As an example, tied to a life event. There are platforms out there now that are starting to pick up that are more focused on those alerts or triggers where you're getting timely product, pushes individual one to one. Most organizations aren't doing one to one very much at all. What they're really doing is uh, seg based, or segment. They have marketing segments that they're using or profit segments that they're using to send out mass communication.
Hmm.
But they have to be able to get to where they balance the two. You still want to be able to roll out a CD special, as an example, to a large segment of individuals, but you also want to have content and reach out to Ryan when he gets married or changes jobs, and so it needs to be a balance of both.
Yeah. It sounds like, and then the other thing I just again taking a liberty here is I've noticed that some of the bigger questions that someone might have about planning for their financial future or how a certain product fits within their overall wealth picture. Those things, obviously there's regulation that banks need to be mindful of, but that guiding content is
Mm,
is something that seems to be a gap from the FIs that we've talked to over the last few years. Um,
Uh,
Go ahead, James. We're gonna
yeah, I
say
was
something
going to
there.
say I could not agree more. I mean, we need more voices from advisors and subject matter experts, not just polished marketing content or copy. So being able to to establish themselves as subject matter experts, much like we do, in the technology side of the businesses, is being able to say, I want to reach out to this local financial institution because they come top of mind for me whenever I'm thinking about saving for college for my kids.
100%. I had a conversation with one of our customers who talked about how do we create the whole buyer journey within the digital format. Someone who is young, who's starting a family, they're trying to figure out what products they need. They're trying to figure out what considerations they should put forth when kind of allocating their money. And so there was content that was not just directly tied to them, but it was tied to topics on their consumer's mind, right? And so that is, I think, the big shift that happens often online that used to happen within a branch that folks are working through. But maybe let's get to brass tacks, James. Let's put you on the hot seat again. You're on for rapid fire. But Zane, I'm curious your thoughts on this one too. If you left Engage FI today, which you're not going to, because I know you love it there, and you were the head of digital at a top 10 credit union in the country, what would be the first things that you would think about when it comes to evolving your digital content?
So the first thing I would do is somewhat what Zane mentioned earlier. I would build a culture of compliance, getting compliance involved early instead of after the fact. That fuels creativity instead of killing it. So then you make your real experts the face of the brand, your loan officers, your branch leadership, financial coaches, things like that. Those are your storytellers. And then I'd invest in the tools to personalize and make it effortless. So making sure that you're keeping privacy, you're not coming across as Big Brother, but you also are personalizing and making those customers or members feel known. We've often talked about the Amazonification of the world, really, how consumer expectations have changed. And financial services need to do that as well because consumers now expect it immediate and they expect you to understand them. So the future belongs to the institutions that can be both transparent and have tailored content because the content really has to feel like advice from a friend, not a form letter from compliance with 12 disclosures at the end. It really needs to be something that feels like it is personalized and from a friend.
James, I love where you started with that because you started about the operations of bringing compliance in, and that is so critical. The workflows, the governance that goes into the content, something we've invested a lot in here at dotCMS. But then the end, what I think is unique is you talked about the number of stakeholders who are going to contribute. Like you need the relationship folks to have some say in creating that digital content because they're not coming into the branch, and so they're two very different things. One is about experience and one is about governance and risk. But I think it's a great answer. I'm going to pass to you, Zane. Outside of the first thing you do on day one would be to budget for dotCMS as your new content management platform. What would your strategy be if you were revamping content at a bank or credit union?
We do think it's a lot very similar, Ryan. That was literally what I was gonna do. I was gonna replatform to .cms.
Perfect.
No, so no, just taking a step back. The first thing, obviously, I define the problem slightly differently. I the problem is not obviously lack of content. Like every interaction that the institution is having with customers is content, right? Whether that's through email or even in person. So unifying all of that content on a single, I guess, database or platform, and then layering, all your different, these different stakeholders, as I said, which is your compliance, marketing, IT, to make sure that, you have faster time to market. And then, somehow making sure that, your taxonomies is, what the content lives and and you're able to reuse it. And then you layer in the last mile, I would say, which is you bring the data in and then you're able to build those customized experiences so that your customers, are getting that consistent message. Um, and I guess the answer is .cms. um,
Zane, jokes aside, you hit on something that I dock myself one huge point as the host for not bringing up, which is reusability of content and approvals, right? James talked earlier about this idea that, commercial banking doesn't know what retail banking versus is doing. And there is things that are going to translate, the viability of the bank, the community engagement, all those kinds of things that content needs to be easily shared across and
right,
approved in an efficient way. And so that's a really critical
right.
one that, yeah,
A-
be
And
mindful
one
of.
thing I missed also, which you can solve for reusability, is content performance. Right. One of the challenges right now is that your content lives in all these different places. It's unaccounted for, and nobody really cares if it's created and used once. So if you layer on top of that some kind of performance metrics, which in .cms we have content analytics, so you can see that not only you are storing higher performant content, but the reusability, you can actually reuse your best performing content too. So yeah, it's like you can solve it differently from just making sure that you're pushing reusability as a workflow.
Yeah, it's huge. The analytics piece, obviously, James, you touched on that early in the beginning too, and I know believe it or not, we're coming close to our time. So maybe I'll ask one more question in this section before we wrap up, which is, um, obviously content and the analytics tied to it show consumer engagement, which is always a precursor to a relationship or a deepening a relationship. But as you think about digital content in general, and an investment in digital content and the systems around it. James, you've talked to many presidents and CEOs of credit unions. How would you present the ROI of going in and revamping your digital content?
Yeah, and that's a great question because, as you all know, the marketing ROIs can get a little squishy, sometimes, and the CFO definitely is always going to push back. But the best way is direct P&L impact. I started running this special, and look how much growth we've had. But really, you have to back into that because you can't wait until you see P&L impact. So you start with measuring engagement, which is first, um, time on pages, clicks, repeat visits. But as you all mentioned, reusability, and the real win is whenever education drives action. So you start to see the pages being viewed, and then all of a sudden now they're reaching out and having a conversation about a college plan, or how do I uh, grow from my current house into a larger house. So if the content drives a 15% lift on time, on page, or a 10% increase in callback requests, now that's really trust turning into traction. So the ultimate ROI is when your customers are starting to quote your advice back to you.
Yep.
But it has to be a true investment, and understanding that you're measuring the success, and then at the end of the day, you're seeing the true P&L impact.
Yep. Trust the transaction is a big one, and it's not always linear, and sometimes the trust might not translate into transaction for months. And so our vantage point is that content is what keeps that relationship on the upward trajectory for when an event happens. So the consistency with that is key. But I think you gave us some really good talking points to get a baseline of measurement, and then the P&L impact, which is what's obviously going to get more investment in content. Zane,
Yeah.
anything you want to add to that? Sorry, go ahead, James, please.
Sorry, I just wanted to. One of the key measures of a bank or credit union is services or products per household. And so, one of the best ways to tell that your marketing is doing a great job is growing that products or services per household number.
Yeah, absolutely. Zane, how about for you?
I'm going to reframe again. Reframing the problem again as what we alluded to earlier, right? We said teams are siloed. We said content needs to be agile. You have those micro moments where where relevance needs to meet timeliness. So if we reframe that problem to the finance team or the leader of an organization as a time to market issue, not just engagement issue, then you can also track your content velocity and say, here's how better we have become in producing, relevant, timely content, personalized, going through all our workflows, making sure it's compliant, and yet still be able to show up in all these different touch points, omni-channel, if you may. So that, I guess, the life cycle of content, if you can track it, and show uh, improvements over time, I think that could also make the case for ROI, which is obviously not the same as tracking engagement with the end customer, but it does kind of take us a little further back in the life cycle, to be able to at least get the conversation started internally.
Yeah, Zane, I like that. I like both your answers because they're from a different vantage point. Zane, just replaying back what you said, this idea, banks care about visibility and credit unions. They care about visibility, making sure that they're top of mind. If your content life cycle is fixed and it allows you to get the right content out when you need to, it's going to have, let's say you need to launch a new CD, promotion and content associated with it. If your content lifecycle is broken, you might not have even the visibility in the market, right? And James, I think what you're saying is once it's live, how do you track it, make sure it's well received to get more investment? And there's a business case on both sides. One is a visibility or awareness, and the other one is an engagement. And both of those things are going to be critical when you think about content. So, great summary. That's why I brought you two together. Happy to have you both on this episode, just to give our listeners some great insight. We are at our time, so I do want to just conclude and give each of you the floor quickly to share any last minute thoughts or key takeaways that you want our listeners to walk away with. So Zane, maybe we'll start with you. One or two key takeaways as folks think about how to use digital content to win mind share and market share within financial services. And James, we'll wrap with you.
Yeah, I guess my first point is what I said earlier, treat it as like an operating model, and not just something that marketing does. It has to tie in pretty much, the entirety of the organization, and treat it as something that you need to create differentiation on, which is your, consistent, relevant, timely, compliant content to market. And I guess my second thing is what I always say: start small. Pick one experience, and I guess measure, like, have a measurable outcome or goal, and then go on kind of improving that one experience, and then obviously it scales from there.
Yeah. Zane, and I like that. Yeah, I was going to give you a hard time for your start small comment, but I decided not to because I think it is something that we've seen. You find a place where content is really valuable and the operations behind it's going to have an impact, a big impact. Might be within wealth management, it might be within retail banking, it might be within commercial banking, and starting there and scaling is something where there might be an appetite within the bank. Going back to your comments, James, around change management. So Zane, thanks for that. Appreciate the context there. James, how about for you? One or two key takeaways for our listeners.
Yeah, so Zane laid out a great framework to think about it. The one thing I would say to a banker, credit union leader is the economy has changed so much over the past couple of years. The way consumers expect to be engaged with is changed. If you haven't given your content strategy a review or a refresh, it's time, because it is really becoming even more and more important to be able to pivot, to get things to market, and to be able to engage in the right way with those customers or members.
No.
And then the final thing is uh, a great digital content strategy isn't louder marketing; it's quieter confidence.
Mm, that's a great one. It's a great one, knowing what your customers need, knowing how to get to them, right? Having the right process in place. So, James, Zane, thank you so much for both joining the episode today. For our listeners, a recording will be sent out within 72 hours, and we look forward to seeing you on the next episode of Real Talk, Real Trust. Thanks, everyone.